Good evening, everybody. Welcome back to the channel. Um, if you've been watching my videos or if you're new here, just stopping by, I would appreciate it if you'd like the video, subscribe to the channel, and leave a comment about my commentary, my analysis, my trading, my clothes, my surroundings, whatever you want. Um, every little bit certainly helps the YouTube algorithm push out the channel to others, so I would greatly appreciate it. Um, Tonight we are coming in to do our weekly prep for next week's trading and to find our levels that we want to be trading at. So let's just jump right into that. And we have our trading view charts up. So those that are new here or have never seen my trading, let me just explain real quick what I use in my trading. Um, Not very complicated. Everything is a free indicator that I use on TradingView. Um, so I have my visible range volume profile here, and that just changes whatever price information I put on the chart. You'll see the visible profile change in accordance with that. Uh, all right. Um, Secondly, I use a session volume profile for the New York session that starts up at 7 a.m. and runs till 4:30 p.m. Um, for the New York session daily. Uh, I also have my moving averages. I have a 20 and a 200, and I have VWAP. Okay, so that's that. I will occasionally check the um, 23-hour trading session with a volume profile, and I just use a fixed volume profile. You can find that over here as well on your TradingView charts. And I just take that and go back to 6 o'clock when the market opens the previous day, set it there, and run it until 4:30 p.m. the next day, right there, and that will overlay this volume profile for the 23-hour trading session. Now, I will typically do this before um, my New York session kicks in at 7 o'clock, um, and just take a look and maybe mark up the value area high and low and the point of control for the overnight session so I can see what New York price does with those levels as well. Okay. Um, well, we can take that off because we won't be using that for this market prep session. So I use a 15-minute chart to find my levels to trade off of. Excuse me. Using both the SMAs, the volume profiles, and a little bit of ICT, looking at fair value gaps and order blocks. Okay, so also I keep up it's usually either a 1 or 2 minute chart, and this is the chart I actually execute off of. Um, on this chart, I also do have the cumulative volume delta because when I get to an area that I want to trade in, I do kind of like to see some uh, volume delta divergence as well. It just adds a little bit more confirmation to my entries. Um, Also on the 15-minute chart, I do have the LuxAlgo ICT Immediate Rebalance Toolkit. And this just shows me uh, basically when price has when candles rebalance uh, right away. So like this was a down move. It came back up into this wick on this side. So this basically shows up when there's not going to be a fair value gap, but it will also give me an X for not tradable, or it will give me a small diamond, which I'm trying to find. You can see there's a lot that are, oh, there they are. These little green arrows here tells me that this is a tradable rebalance, and you can see the next candle. If we got in at the close of this candle on the rebalance, put our stop uh, below, you know, I would put it down here just below the 21, and you see the next candle after the rebalance came down, tagged the 21, and away you went. You had basically uh, 45 minutes of upwards price action there to grab some money. Okay, again here you had a rebalance, uh, and if you entered at the close of that candle, you had 15 minutes of straight up price action. 236, uh, about a 90 point move there on that 15-minute candle. So would have been a very nice trade there. I don't take every rebalance, but certainly do take that into consideration as well when I'm looking at levels. So let's get to the crux of it because we won't be using the 2-minute chart. We're just going to expand the 15-minute here and get back to current price action. And I'm going to squeeze this down a little bit and I'm going to pull in the entire month of October. Uh, ooh, we don't need that. There we go. So we'll put the entire month of October on the chart and take a look at the volume profile there and see what we've got going on, right? So the majority of the volume happened right around here, and you can see why, because we had quite a long consolidation in that area before we dipped below, and the point of control, at that point held as resistance for a little while until we finally broke above, and then we've dipped below a couple of times, but we are now holding above the monthly point of control. Um, this is why I like the visible range profile. You can go back and check the weekly point of control, the monthly point of control, go back and check the quarterly point of control if you want to. I really don't worry about anything more than the current month, um, and just to see where it's at. Okay. Um, so the session volume profiles, our value area highs and lows are the white lines, and our point of controls are these neon greens. Um, and we'll pay attention to those, throughout the day, especially the previous days. Okay, so this point of control obviously was taken out, um, but because it is the last one that we went through below current price, I would mark this out and keep it in mind for when price comes down into this area um, come Monday morning because we are pretty close to it. We could come back to it and see what happens there. So let me take this drawing off because I want to show you how we find that. That is the dealing range, and that is an important drawing that I put on my charts on the 4-hour chart. So let's go ahead and move to the 4 hours so we can look at the higher time frame here. And now we can just spread this out a little bit so we can see what's going on here. Okay, so we had this little consolidation area here uh, for a while until we dipped below and swept a lot of liquidity, swing lows down here off of these days. And then we just made this bigger consolidation area down here. until we finally broke above and finally made all-time highs. Okay, so in the more recent time frame, okay, um, no, that is still the monthly, basically right there. Um, we have this area here to deal with. So this area right here is something that I'm looking at as as an area of price action where I would definitely want to be trading. There's a few reasons why. Number one, it is a high volume area shelf, okay, that is below price. That very well could hold and act as support, okay. Unless we're going to dip below it and fill in some more of this low volume area here, but I'm pretty much willing to guess that we're not going to, and I'll explain how I think that now. Um, so we made a high back here, uh, came down, swept the low, and then went back up and swept that high. Okay, and that was the double top at the last all-time high. All right, so this leaves this as a breaker bar. Okay, so now we're going to move into a little bit of ICT concepts, and that is where I find my higher time frame levels to trade with. Just so happens that this high volume area is going to react with all of the levels I'm fixing to show you, which is why I have such good feelings about trading in this area. So let's expand this a little bit so it's a little easier to see. Um, so this is our breaker bar, right? So let's say we made a swing high here, higher swing high, sweep the low, new high, breaker bar. All right. So if I were to uh, just put a box around that breaker bar. Now, this this breaker bar has a midline, the white dotted line, right? So if I put it on that candle, you can see that the midline of that breaker bar lines up pretty much with the midline of the box I drew around our high volume area. Okay, so that's looking pretty good. Um, I like that. So let's just move. I'm gonna put just a little different coloring on this. Ooh, it's a little bright so that we can kind of just see everything here. All right. So what else do we have in the area? Well, we have the 4-hour fair value gap that was made on Friday. So if we put our fair value gap box up on that, you can see the midline of the fair value gap also lines up in that same high value area. Okay. What about an order block? Well, we got one of those too. Now, a lot of people will say the last down candle before the push up that breaks structure would be your order block, okay, which would be this little candle here. Now, this happened in London session, and that doesn't give me a lot of information, and that's not what I'm going to use as an order block. I look at order blocks a little bit different. I want to see an order block that has strength in it, and that candle there doesn't qualify. Neither do either of these two down candles here. What does give me strength, show me strength, is this three candle down move right here in the New York session from October 22nd. Okay? So looking at this order block, there is something that I'm not too concerned with here. This first down candle, again, happening in London session, lower volume, not a very big candle, not a lot of strength in there. Okay, so I kind of discount that candle. Um, these two candles now show me strength bigger candles, bigger volume, and much further pushes on those 4 hour candles. Okay, so I know the midline of this order block is going to be somewhere down here, and I'm thinking price isn't going to come back down here because right now all of my confluence is sitting right here. Okay, in this area. So what about this order block does give me a little bit of confluence to that area is the opening price of what I would consider the order block, okay, which is the opening price of this down candle here. Again, discounting this one just because not a lot of volume, not a lot of movement, and in a overnight session not created in the New York session, okay, where all the big money is playing. So the opening price of that order block sits right in our high value or high volume area on the volume profile. Okay, so this is the area that I'm looking at. If we get back down to this area, I definitely want to be looking for the reversal to go back to these highs. Okay, and that is 47,140. Now a little under 400-point move. Okay, um, about a 370-point move there. So this is what I'm looking for. Now, now that I've found an area of interest below current price on the higher time frame that I would like to trade from, I need to find an area above us. Well, what levels do we use for that? Because there are no levels up there. We're at all-time highs. There is a way to find levels to trade off up there. Okay, so I'm going to take all of these drawings off because I don't need them, because I'm going to leave one on there, and that is going to be this shaded in area for the high volume area, right? Okay, I'm going to leave that on because if price gets back down to here, then I'm just going to be looking on my lower time frames for the sign of the reversal to go back up and continue higher. Um, I want to keep as much off of my charts as possible because it's already busy enough with all of the session profiles, right? Um, so we have that. So how do we find where we could go to the upside? Well, we can do that through standard deviations. And basically what I measure to find those levels are the manipulation moves in the market, right? Um, we had two manipulation moves kind of back to back here. We had this manipulation move where we swept the low and then went and took a previous high, okay? Um, and then we had this down push here, very strong down push that swept the lows and then continued up to sweep a previous high. Now, you'll see in both of these manipulation moves that we have a swing high where the down push starts. But then when we come back up, I'm not looking for it to break that high. I'm looking for it to break a previous high, okay, from the manipulation move, which we did here. And this manipulation move, we went up and took this previous swing high, okay? So that's what I look for in a manipulation move, right? Um, and we can measure these manipulation moves with standard deviation to find levels, okay? So we're going to start here and we're going to go from the bottom of the manipulation move to the high of that manipulation move. And we now have standard deviations above this manipulation, okay? And I use wholes and halves. So 1, 1.5, 2, 2.5, 3, so forth and so on. If I dog line, yeah. All right, and what I'm looking for basically is 3 to 4 standard deviations out of a move, right? Um, there are times where it will stop at 2 deviations um, and reverse for a while, And of course, the market's going to go back and forth. We're not just going to go straight up to 3 or 4 deviations. Um, but this is the target that I'm looking for uh, to basically stay in a bullish trend until we get there, understanding that there's going to be pullbacks along the way. Um, so what do I do with that? Um, that alone might work. I mean, 4 standard deviations is right up at 49,000 level, big round number. Um, so that's possible, but is there a way to kind of verify that? And again, I said we had, you know, two manipulation moves here that we could measure off of, right? Um, which was this one here as well. We also have one here where we took the swing low and then went and took a previous swing high before then reversing. Um, mm, yeah, we'll see, but I don't typically use three. Okay, so let's just go ahead and put on another standard deviations with this manipulation move here from the low to the high, and we'll change the color so we can see the difference in these. Okay, um, so if we were looking at 3 to 4 standard deviations on this manipulation move, we would either be here or here. Well, this one lines up with the 2.5. The 4 standard deviations also pretty well lines up with the 3 standard deviations from this move. Okay, remember I'm looking for 3 to 4. So if 3 and 4 are matching up pretty close, and that's pretty close. I mean, that's 895. Uh, yeah, 895, 894 uh, to 49018. Okay, so that's about a little over 100 point difference. Okay, which isn't much in the day of the YM that moves can in good volatility can move 5 to 600 points a day. Okay, so that's pretty good confluence. But there's something else that you may or may not have noticed right away. Um, the 2 standard deviations for both of these moves, right, is sitting right here at 47.8. Okay, that catches my eye. All right, so we may go to 3 or 4 standard deviations, but when we get here is where I would expect a very nice pullback, very nice tradable pullback. This is the one time where I would be looking for shorts. Okay. Um, right now, I am looking for longs because we are bullish in the market. But when we get to 47,800, I am going to be looking for shorts. And I will be trading that back down to other levels. Um, you know, that is certainly a place I would expect the market to pull back. All right. So I will mark these numbers on my whiteboard to remind me. Um, and it'll just say basically short from 47,800 or long from 47,120. Now, obviously, I'm not going to enter specifically at those prices. I want to watch the lower time frames and see what price action does at those levels, right? I want to have a little bit of a confirmation uh, that we are going to do what I think we're going to do before jumping into a trade. Okay, so now we have our levels above and below us. Okay, now the other thing I want to check is I work with ICT concept called dealing range theory. So what that is anytime we sweep a low, basically have a manipulation move, we sweep a low and then go up and take a previous high. Okay, so the move down had a swing high that was the manipulation move. But when we come back up, I want to see it take out a previous high that was made before the manipulation move. Okay, so we did that here. So we have a dealing range in this area. And a dealing range is just a fib that cuts this price action into quarters. So I'm going to draw that from the top to the bottom of that price action. And I'll change the colors there so we can see the 50% line a little bit better. All right, now this is our current dealing range. And what I want to see here in these levels are fair value gaps at specific levels, okay, um, which are the quarters, 25, 50%, 75, okay? And then we have the high of the range and the low of the range. So if I move down to the 15-minute chart here, basically what I would want to see is a fair value gap at the 25% level, all right? And we don't have one, okay? So that's a problem for me. So we certainly um, could continue to move up from where we're at. If we do pull back, okay, um, again, I'm looking for this area to hold, and I'm looking for uh, possibly VWAP and the 75% level to hold before going up. We do have um, a gap at the 50% level, okay? So if I were to take uh, another deviation tool, okay, because if this were to be our true 50% gap that doesn't get touched again, um, we could measure here to see if price lines up somewhere above. So basically what we want to do is we want to grab another deviation tool and we want to measure from the dealing range low to the top. Oh shit, take that back. Sorry. Always go from top to bottom on a bullish movement. So I want to take the top of the fair value gap at the 50% line. Jeez, I keep getting it backwards. Sorry. All right. So from there, you bastard, you bastard. Uh, oh, okay, that's just something on my screen. Shit. Yeah. Okay. So, okay, let's get this right this time. From the low to the high of that fair value gap. Okay. So we have two standard deviations sitting right here. All right. Now, this is what I would kind of expect. Maybe we break this low, maybe we don't. All right. Maybe if we push up, I would expect us to come to the 2% or the two standard deviations. Okay. Before pulling back a little bit. All right. Now, if we do that and we pull this up to there, because that would be our new dealing range at that time, right? Okay. Then we take a look again at our 25% level. Well, one thing I'm looking at is that I like it. It's showing um, some good support and resistance right here with candle bodies and wicks. Uh, you know, looking pretty good. But we still don't have a fair value gap here. Actually, let me revise that statement. We do, but it was rebalanced. Okay, a breakaway gap. should never be rebalanced. All right. So if we were looking at the range, what we're looking for is a breakaway gap that does not get rebalanced. Well, we had one right here. So that needs to happen around the 25% level. So again, that's two standard deviations. Let me change this just a little bit. Um, let's see. I want to look for, okay, 1.5 standard deviations. That's the 0. That's the 1. Uh, no. Okay, that's the 2. Okay, there we go. That's the one I'm looking for. Okay, let me change the color on that. Let's just go purple. Okay. And do we get anything that lines up there? Well, 2, 2.5, 3, 3.5, 4, 4, 5, 5.5. Yeah. These three are pretty much the only place where all three are put together, right? So let's just say we move up to this area and we'll just split the difference. Now, if we see our 25% level, it moves up to the first move of Friday morning where this fair value gap is. Okay, so this again is another big area for me to be looking at. Okay, we have the 2 standard deviation. We could certainly push up to that and then have a nice pullback. Um, you know, we could pull back from where we're at to the 50% uh, level. Okay, so from where we're at, if we put our deal, the which is the current dealing range at the moment. Okay, I don't think we come back to 50%. Okay, because it's below VWAP. It's below our high volume area. Uh, so we'll just have to see how the 75 does. Now that's 25%. This could easily pull back 25% and then head higher to the 2 standard deviation. Okay, 2 standard deviation puts us where with the 50%? Right into our high volume area. Okay, so this is kind of what I'm looking at. Okay, stay with me. A pullback to VWAP at the 75% DTR level. We hold there, we push up to 47,621, the 2 standard deviations. Okay, which then pushes us back down to the 50% back into discount pricing at that high volume area that we are looking for that has all of our other confluences to then go long. Or we come down and hit that first and then go up, changing our dealing range. Okay. But if we go higher from here, these are the levels I'm looking for. 47,620. Okay. To reverse pull back from there back to equilibrium. Then to push up to 47,800 to then pull back to a DRT level with a fair value gap and such to then go higher to reach our final target up here around 48,400 or all the way up to our, where did we have it? Our 3 and 4 that were put together. That's 5. That's 3. Okay, 3 and 4 are right here, up around the 49,000 area. Okay, so this is what price action looks like. Down to the 25, up to the 2, down to equilibrium, up to here, down, and then just kind of bouncing its way up all the way close to the 49,000 level. Okay, that's what I expect. We'll see. That's some bold price action statements right there. All these damn notifications coming in from YouTube. I'm subscribed to too much shit. Um, and we'll see. I mean, that's it is good. It is good to have a theory, you know, and using DRT, dealing range theory, and deviation tools off of specific measuring points um, to get those levels, and then see what price action does. Eventually, you get to a point where you start being able to call price action levels before that price action is ever printed. Okay. Um, so we'll just have to see what next week brings and see if the kind of movement I'm looking for actually happens, right? Um, so yeah, I mean that is pretty much what I'm looking for and how I'm going to deal with it. Now I just have to put these levels on my whiteboard so that I can uh, remember at what price levels which type of trade I'm expecting to be able to take. Now I am more than willing to change my bias if we get to one of those levels where I'm expecting a pullback and it doesn't pull back and we fair value gap through that level. I'll be more than happy to change my bias and take the opposite trade and trade it to one of the other levels. I'm got no problem with that. But I like to have a theory on how the price action is going to react at certain key levels and then see if that develops over time. So we're running about 40 minutes here, so I'm gonna call it a night. I hope this was informative. If you liked it, you know, give me, hit that like button down on the video. If you want to see more of it, subscribe to the channel. Even if you want to try to see if I'm proven wrong and then laugh at me, hey, go for it. Um, I've been wrong many times in my trading life, and this won't be the first. It probably won't be the last. Um, but it really helped if you like the video, subscribe to the channel, and again, you know, put in a comment about what you think. If I'm right, wrong, if you're excited to see if it works out this way, whatever. Um, Happy to engage with anyone that watches my videos. And until Monday morning, really ain't got much else to do. So, hope everybody has a great rest of your weekend. God bless and stay safe out there.